Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, I'm going to talk about how you can win at life without being too over competitive, right? You ever notice that most people's focus is just like, what's the competition doing? Like, oh, we got to eliminate them rather than focusing on their craft and building their skill set and foundation. Most people, for some reason, just don't care about getting better at what it is that they're doing, but really focus on eliminating competition. And I think because their focus is on the wrong place, that's why they never really achieve their goals or talk about doing it. Or another thing that they do is they talk about their past glories, kind of like Al Bundy um, in Married with Children, 4 touchdowns in one game. Although I do have some of those moments in my life as well. 4 touchdowns in one game. Okay, so let's talk about this. Here's the thing. I honestly think that 99% of people will never be here, right? Not because they can't do it, it's because they're way too over competitive. And why do I say 99%? Well, this is my screenshot of me flexing over and over again in pretty much every single YouTube video nowadays. And what this is just I just paid off my mortgage under 3 years, right? You see maturity date 2051. First date of the payment is the mortgage payment is 11/1/2021, right? You subtract 30 years, and then you see July 29, 2024. Oh, it's all paid off. Conventional, no PMI, lien position one, all paid off. And then I got a first lien HELOC after it was all paid off, $280,000 in a home equity line of credit. And I know that most people will never experience this. In fact, ChatGPT already affirmed that most people will never experience this, and it's funny, but it's I want everyone else to be here too. I'm not gonna lie, just because if you're the only rich person in this society where everyone else is struggling, it's like, man, you want some rich friends to kind of hang out and relate with. But too many people will never get there just because the average person is way too over competitive and they won't help each other, which is kind of sad, right? It's kind of sad, but it's all good. It's all good because if you're here, I want to brainwash you with good values so that you can be successful in life and hopefully be in that 1% that I'm talking about, right? But let's go ahead and do this. Let me read out ChatGPT what ChatGPT says when I paid off my mortgage in 2 years and 9 months. What percentage of people does that put me in?
Paying off a mortgage in such a short time is impressive. While exact statistics can vary by region and the specific demographics surveyed, generally, only about 1 to 3% of homeowners pay off their mortgage in under 5 years. Given that you paid off your mortgage in 2 years and 9 months, you would likely be in the top 1% of homeowners regarding mortgage payoff speed. This indicates a strong financial strategy and discipline on your part.
Strong financial strategy. I don't know if I'm that disciplined to be honest, but man, I did have a strong financial strategy, or at least I think I do. Called Velocity Banking. Here it says top 1%. Top 1%. So here's the thing. Whenever someone comes to my channel and tells me Velocity Banking is a scam, I'll actually agree with them, believe it or not, because I'm not trying to win debates or arguments. I'm just focusing on my craft. You ever notice that? Like I'm not trying to say, "Oh man, the haters need to stop hating and I need to debate and argue with everybody." I just don't care. Listen, 99% of the population can think it's stupid and it's a scam, and that's cool cuz 99% of people will never be where I'm at. I mean, it's that simple, right? And here's the other thing too. There needs to be a mindset shift. There needs to be a mindset shift, which I'll get into as we go along the review. But let's go ahead and get started with the velocity banking review. So let's just do this. What is velocity banking? All it is a debt payoff strategy using a line of credit to help you get there, right? A line of credit as your main operating account. And so what we're going to do today is just go over another simple scenario. Sometimes we like to play around with like $12,000 of income, $20,000 of income. We're going to do $5,000 of income, right? $5,000 of income. So really only two things needed to do velocity banking. Number one is a budget, which we have. So you list your income, expenses, leftover savings, and then in the expense breakdown, we're going to list all of our debts, right? List all of our debts, and then last line, we just kind of make an estimation of what we think we spend per month on things that aren't debt. Okay? This is a debt elimination strategy. So the whole point of this is that to make sure all of our debt goes to zero, and then this is going to increase our cash flow. But we're not trying to change our lifestyle, right? So it's not, we're not going to go from $2,000 a month on food, gas, insurance to 1,000. We keep this number the same no matter what, okay? Now, the second thing we need is a line of credit. So what's a line of credit? All it is a financial tool where you could borrow money, pay it back, and then use it over and over again. And a credit card is a line of credit, but there's also personal and home equity lines of credit. I got all of them, and if you got all of them, then you're kind of building a good foundation, financial fortress to help you get through to the hard times. And I have over $527,000 in lines of credit, and one of the reasons why I was able to get that is because I understand banks and how they work. And, just a quick summary of how they work is that they don't lend money to people who need it. And so many people, they get into financial situations and they're struggling, and then they try to go to a bank and wonder why they get denied, rather than understanding you got to learn all of this first before you ever get into debt. You understand that? Most people do not do that because what they try to do is, let's say I try to sell you a $2,000 educational package about all this, right, including real estate investing and financial literacy. This is how most people will react. They'll be like, $2,000? Oh, I never do that. And then what they do is they'll metaphorically drive the car, resent you for trying to sell them some driving lessons, and then crash it, and then thinking, "Oh man, like I probably should learn how to drive." That's how most people are. And I say this just because I have the same repeated experience over and over again. But it's the same program that I took that helped me learn this stuff, right? And I put in some practice every single day. But my point is this, right? My point is that I never really resented learning from other people or even paying for it, right? What what you have to do as a good consumer is risk mitigation so that you don't like get sucked in and ripped off by charlatans and hucksters who promise you immediate results in 3 days. That's what you got to do, right? But back to my point, okay? My point is this: we need to understand how the banks work, and too many people don't even get offended. They even get offended when I say banks don't lend money to people who need it. And one of the reasons why is because the way that banks market themselves to the world, which is like they're a community center and they're here to help you. And then once you go to them and you're struggling, they're like, wait a minute, you need money? They'll laugh you out the door, right? It's kind of sad, but it's really true. And in fact, I just asked ChatGPT this morning about how people get offended when you tell them that banks only lend money to people who need it. In fact, let's go ahead and go to ChatGPT's response right here. And then I asked ChatGPT, why does it seem like people get offended at the notion banks only lend money to people who need it? Let's go ahead and play it.
The notion that banks only lend money to people who need it challenges some deep seated assumptions people have about financial systems. Many assume banks are there to help people access funds when they're in need, not just when they are already financially secure. This phrase can feel like a cold reminder that banks often prioritize lending to those who are least likely to default, meaning, ironically, those who don't necessarily need the money urgently. Additionally, some people might feel offended because they've personally experienced difficulty accessing credit or loans when they were in financial need, only to be denied. The statement can feel like an accusation or even a reflection of the system's lack of empathy for those who don't have the security that banks look for. It's a sharp reminder that the banking system is driven by profit and risk management rather than support and security for everyone.
Mm-hmm. But that's reality. And so here's the thing. I didn't create the game. They created the game. You just need to learn how to play it. And most people get offended because it's just like they should be there for me when I'm in trouble, and that's actually not true. That should be your family and community, but most families and communities have kind of abandoned their constituents and members, and so we think that in place of our families, we need to rely on giant impersonal institutions that don't care about us. But these giant impersonal institutions can't survive um, if they're going to deal with people who don't fit their notion of risk and profit. Okay, it's really important, but most people don't want to hear that. Okay, so let me go back to the spreadsheet right here. So all right, so now we need a line of credit. And again, I told you that I got tons of lines of credit. I always show these screenshots in almost every single video nowadays. But this is a $15,000 personal line of credit, $280,000 home equity line of credit. And so what's cool about these is that let's say I have a $50 bill due, I could just literally take the $50 from the line of credit and then put it back. And then it's like, oh, monthly payment, satisfied, right? You can't do that with a credit card. That's insane. I had no idea. I'm like, whoa, this is like life on cheat. It's like a cheat code, or like yeah, I mean, cash management on steroids. I don't have to. Man, I think this is why a lot of people are also afraid of credit cards because just that minor inflexibility. But with the line of credit, there is no inflexibility. In fact, I could just go to the bank's website and then like dump $280,000 into my checking account, right? But for this example, I think we'll just assume that we don't have $280,000. Maybe we have, I don't know, 40,000. Let's assume 40,000, okay? And then let me just do this, and then we'll just redo most of these formulas and start here. So let's just do this. We assume we have the same income and no savings, and this is the part that's scary for most people because most people are trained by society that they have to have savings. And the whole point of velocity banking is that you can just throw all your money into debt and feel free to use the money that you have. So, for example, the reason why most people will never pay an auto loan or mortgage with their savings, like this one right here, $454, is that if I dump this entire $454 that's left over into my mortgage, I can't really get it back. You see what I'm saying? Like I can't really get the money back, or it's really hard. Okay, so let's go ahead and move some of our debt. So this is going to be $31,000. Okay, so 31,000, and move it. And so once we move that debt into our line of credit, it's just basically a debt transfer, kind of like a credit card transfer. Guess what? This goes to zero. This goes to zero, right? And then now this is $454 of savings. Now we went for the opposite way with savings, and we have a cash flow of 1554. Okay, and so some of you might be freaking out. Do I really do this? Yes, absolutely. So if we scroll down, this is my checking summary. You see the beginning balance is zero. I get paid, and then I put all of my money into debt, so I have nothing into my checking account. Absolutely nothing, right? Absolutely nothing into my checking account. And so if I go here, okay, and now I'm going to just go ahead and talk about the final step, which is that you put your entire paycheck into the line of credit and then you take your expenses out, right? Entire $5,000. It doesn't matter when you get paid. People like focus so much on the minute details, weekly, bi-weekly, monthly. It doesn't even matter. The whole point of this is you're applying all of your active income into debt, and there should be nothing left over just sitting in savings. And that's what the line of credit will help you do. Okay, so let's go ahead and do this, and then we're going to calculate the next month's balance plus the next. So that's based on the previous month's balance plus the previous month's interest minus 1,554.64. Okay, and let's go ahead and calculate the interest. Okay, so the interest is going to be based on the average daily balance and then multiply by the interest rate, which is 0.08, and then divide by 12. And then you see that Here the interest is $200, and then next one is like, oh, going slowly, going down, and then we just gotta figure out until it goes in the red, meaning the debt is completely eliminated. And so we see that it takes a little bit more. Oh, could it take more than 2 years? All right, maybe 22 months. So it's a little bit less than 2 years to pay off that debt. So let me go ahead and do this, and this will be 22 months, and then it'll be 31K. All right, all right. So now, we have an auto loan, mortgage, and then let's figure out at 22 months what the debt. I'm sorry, what the current balance of these loans are, and we have our loan calculator for that. And so now I'm just going to put month 22 right here, month 22 right there, and then we see that our current balance is 13 grand and 240, right? So I'm going to pay off this auto loan, and then what we're going to do is recover the $391 of cash flow. Why this auto loan? It's because of this thing called the cash flow index that helps us indicate which one we should pay off first. And the lower the number, the better, right? Do you want to pay? Would you pay someone $13,000 to get $391 a month back, or would you pay someone $240,000 to get $1,000 a month back? I would pay the 13 grand to get the 391 because it's more bang for your buck, right? So let's go ahead and copy this, and I'm going to copy this right here. Okay, whoopsie, I probably screwed this up, or it's from a previous demo. Let me erase that. Okay, so now this is 22 months, and what I'm going to do, okay, whoopsie, this would be 13 grand plus 13407.02. Okay. And then now, once we move that auto loan debt, we get the $391 back. And now we're at almost $2,000 of cash flow. $2,000. Okay. So let's copy and paste this number, right? And then now it's 1945.96. Okay. And then now what we're going to do is just copy and paste all of these numbers here, and now it's 29 months, right? 29 months till everything is paid off. And let's go ahead and do this right here. 29 months, see, 20 months, 29 months, and then 51K paid off. And then now we got to tackle on the 3% mortgage, right? So what we can do is two things. So the default is just to overpay this mortgage, right? So you make your monthly payment, and then you make it the on top of that the $1,945, meaning you will have zero savings. Now, let's think about this. Why do most people not do that? The reason why most people don't do that is because um, you put your entire savings into that loan. How do you get that money back in case you need it? And this actually requires some financial discipline because you have to know the exact amount that you're going to overpay the loan, right? Because it's not a flexible tool. Whereas with the line of credit, you can easily dump all your paycheck, and your expenses can be variable. Maybe 1 month they'll go up, 1 month they'll go down, right? But you don't have to think about it. And not having to think about it is sweet, right? That's how I paid off 58 grand of my mortgage in my first year. Because what I did is I took a chunk of the principal, and then I just applied my entire paycheck in, and I was like, whoa, 58 grand paid off in a year. Whereas if I directly overpay it, I have to be exact every single month as for me to know how much I'm going to overpay. Okay, and that's what makes budgeting and financial planning really scary. The fact that you do have to be like super um, over accurate with a lot of things. Whereas, as you see when I do the demonstration, I just kind of put like all of my expenses into one lump sum category and just focus on paying off the debt, right? Hopefully that makes sense. Now, what we would do, what as an alternative to directly overpaying, we can still use our line of credit. paycheck in, expenses out, and then after every single month, it'll still go down by our cash flow. So let's go to the loan calculator right here. And as we can see, in 22 months, we paid off about, I don't know, $10,000 of the loan, almost about $10,000. And let's just do this. Let's move $10,000 into our line of credit and see how long that takes us to pay off. So what I'm going to do is I'm going to add $10,000 here, and our cash flow should stay the same, right? Cash flow should stay the same. And then we see, okay, whoopsie, that in 1, 2, 3, 4, 5, in about 5 months, we were able to do a little bit more than what would have happened in a little bit less than 2 years. It's true. It's crazy, right? And so let me actually open up the Velocity Banking Calculator so we have an accurate estimation of when this whole thing gets paid off. So give me one moment to fill it out. All right, here we go. So this is the Velocity Banking Calculator where you just input the numbers and it gives you a payoff, right? 7.6 years. Not bad, not bad. And this is from Renatus. This is where I originally learned Velocity Banking from. And it helped me get into top 1% because I never heard of it before I took their classes. So results not guaranteed, blah, 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 blah. And this is not my calculator, this is theirs. Anyways, so I just put in the numbers, and then now it's the payoff is 7.6 years. And look at how much interest I pay. Only about 30 grand, not bad, right? Now, here's the most important thing, okay? Don't put your entire mortgage into a line of credit. You may have heard that on the internet, and I can't stress this enough because every time I show this, I put this entire thing in a mortgage. Look at how much interest I saved. 8 grand. 9.7 years and 8 grand. You accelerated most of the interest to the bank and not made them wait for 30 years. The whole point of this is to accelerate it and also reduce the interest paid. So again, if I do $5,000 little chunks, it's 7.6 years and $86,000 of savings. Man, people don't know how to do the math. Like, I'm shocked. But that's one way you got to get ahead too. Is always, trust but verify. And too many people are trusting but not verifying. Okay, so let me go ahead to the other spreadsheet, to the other section of the Velocity Banking demo. And then how many years was that? That was about 7.6 years. Okay, so now this is 0, and then 29 divided by 12, 7.6. And then so it's about 10 years completely debt free, right? So that's 301. I think it's, yeah, 51 plus 250, that's 301K. Whoa, $301,000. Not bad. Not bad. In 10 years. You see how like more income is always better? Because every time I do these demonstrations with like more income and more debt, it always turns out to be like 7 years in total. And this one took 10 years, right? So don't be afraid to make more income. And that's what a lot of people are afraid to do because their mindset is fixed in that I can only be in a certain income level, but you really don't, right? If you have the mindset and you just kind of ignore most people, you'll be able to make more money and obviously focus on working on your craft and pitch. That's how you make money too. And also, don't be afraid to make a YouTube video every single day. You know how I get so good at this is because I just practice every single day. I mean, who gets more results? A person who studies 1 hour for 20 days, or a person who studies 20 hours for 1 day? It's the person who studies 1 hour for 20 days, but nobody in our society wants to admit that because they're trying to be like, I'm going to pull an all-nighter. You know what I mean? Like, no, you're not going to learn. Like, even if you get an A, you're not going to remember anything you learned, right? So you kind of have to think about it also in terms of like physical fitness. If you're just starting out in physical fitness, are you going to get more results where you have, well, let me say this, where you exercise 1 hour for 20 days, or Or you have the two options: 1 hour for 20 days, or 20 hours in one day, kind of like a marathon. Oh, let me actually say this: 1 mile for 20 days, right? You run 1 mile for 20 days, or you run a marathon, or you run 20 miles in one day when you're starting out to exercise, right? So, yeah. Okay, well, that's it for today, everybody. Um, yeah, so this is how you learn these strategies, and then you'll beat the 99%, right? Because too many people are like, I need savings. And just the fact that you have savings, and again, I'm not giving you financial advice, means it's just idle and not being used to pay off debt. And that's the whole concept of velocity banking, is that you're applying all of your money to pay off debt and still maintaining control of your money, right? That's why we have the line of credit. Okay, well, that's it, everybody. Have a great day, and we will speak next time.